Hey everyone, Artem is here. I'm a CPA and the managing partner of Torrent Accounting. If you run a construction company, residential, commercial, specialty trades, I want to ask you a quick question. Does your profit and loss give you financial insecurity? When was the last time your financials actually made you feel calm instead of giving you heartburn at 2 in the morning? Are you buying Tums in bulk? We thought so. Today, I want to talk to you about something most contractors don't think about until it's too late. Why you really need a dedicated construction CPA, not a generalist. Someone who actually understands the crazy industry that you are in. Let's start with reality check number 1. Construction is a financially brutal business. Revenue comes in lumps tied to project milestones. Cash flow is a roller coaster, right? You feast 1 month, you famine the next, but payroll hits every single week, whether you got paid or not. Equipment costs have skyrocketed while depreciating the second you put it into use. And then how about that retainage, the 5% that they sit on until they feel like paying you? In most businesses, accounting looks backwards. How did we do last month? How helpful is that in reality? In construction, accounting has to look forward. Decisions you make today about how you recognize revenue, how you cost the job, when you buy that next excavator, those choices can either give you breathing room 12 months from now or put you in the cash flow chokehold. And yet, way too many solid contractors are still using a general accountant who also does books for the local pizza place, the hair salon, and the guy that flips houses on the weekend. And they're great accountants. There's no offense to those accountants. They're great at what they do, but construction is a completely different beast, and you guys know that. Treating it like retail, restaurants is like bringing a butter knife to a gunfight. I learned the lesson personally here myself. I finished the basement. It was only like 70 sheets of drywall, but the point of that story is I underestimated my cost by like 90%. So what actually is a construction CPA? It's not the person who shows up in March, crunches last year's numbers, hands you a tax bill that makes you wince, and then disappears until next spring. A real construction CPA is part of your leadership team. They live in the world of determining the best accounting method based on your qualifications. Should it be cash, percentage of completion, or completed contract rules? Work in progress schedules actually tie to your bank account. Retainage tracking so you don't accidentally spend the money you don't have. Again, I want to ask the question, are you tracking retainage separately on your balance sheet? If not, why not? Job costing that tells you honestly which customers and which types of work are making you money and which ones are quietly bleeding you. They build the financial infrastructure, so when you look at your numbers, you're not looking at pretty lies. You're looking at the honest truth and early enough to do something about it. Let's hit a few of the big areas that trip people up. The first, one of the biggest one is revenue recognition. If you're on percent of completion, which most growing contractors end up on, you recognize income as you spend costs relative to the total estimated costs. Sounds very simple on the surface, but if your cost to complete estimate is off by 10%, you suddenly owe a bunch of tax on money that you haven't collected yet. Typically, cash basis of accounting can make the most amount of sense for qualifying builders, provided they're lacking multi-year contracts. And nothing says happy holidays like an $80,000 tax bill in April, because you feel guys were too optimistic about how many hours the job would take. A construction CPA keeps those estimates disciplined, projects your quarterly estimates so you're not caught off guard, and helps pick the right method so you're not paying taxes before you get paid. And let's talk about retainage next. Everyone loves to talk about the contract price, but the 5 to 10% of your bid is sitting in someone else's bank account for months. I mean, occasionally years. If you don't track retainage separately, it's really easy to look at your accounts receivable and think, man, we're flush, all this money's coming in. Then write payroll checks and buy materials like you actually have the cash. A good CPA will make sure your WIP report shows what's real cash versus what's cash someday. Nothing build owners' confidence like bouncing a subs check because you spent their retainage on new boots for the crew. Let's go to work in progress reporting now. And this isn't just homework for your bonding company. A clean WIP schedule shows contract value, including any change orders. We all love change orders. Are they signing your change orders? Cost to date, estimated cost to finish, the percentage complete, billings versus earned, under and over billings, margin trends by job. When that schedule is accurate and reconciled every month, you spot trouble early before it becomes a crisis. You also look rock solid to sureties, which means bigger bonding limits, which can mean bigger jobs, which can mean more profit, if you don't screw up the cash flow part. And speaking of cash flow, construction cash flow is volatile by design. Payroll, as we've discussed already, doesn't care that your last payment is 45 days late. Suppliers want COD or net 30, sub wants to get paid fast. Retainage delays everything. A construction CPA ties job costing, billing schedules, tax projections, debt payments, and equipment capex into a rolling cash forecast. So instead of reacting when the account hits $3,000 on a $400,000 payroll week, you see the squeeze coming 3 months out, and you can actually plan. Bonding companies, they unfortunately don't care how charming you are on the job site, and I know you're charming. They care about your consistent margins, an accurate WIP report, reasonable working capital, that's huge. And they don't like wild, unexplained swings. A specialized CPA will recommend an accounting method that makes the most sense for your business and its cadence. The one change alone can bump your bonding limit 20 to 50% in a single year. We've seen it happen. I want to discuss a couple of big value areas. Proactive tax planning, quarterly projections so you adjust estimates and don't get killed at year end, and so you also don't overpay on your quarterlies. Equipment decisions, should you buy, should you lease, should you take Section 179 or bonus depreciation? Timing modeled against your actual projected income. Multi-stake headaches, they will happen. Nexus, apportionment, payroll registrations, before the state sends you a love letter with penalties, which I can promise you they will. Job costing discipline, so your next job bid is based on real history instead of hope. Hope is not a strategy. And internal controls, fraud, misclassified payroll, sloppy change order billing still happen. Even succession or exit planning, have you given that much thought? Clean books and normalized earnings make you worth way more when it's time to sell or hand it off. What's the bottom line in all this? If you are serious about growing with control instead of growing into chaos, a dedicated construction CPA isn't a luxury. It's infrastructure, like having a good superintendent, reliable subs, and software that doesn't crash during crunch time. So I want to give you some homework. You don't have to do it. Just give it some thought. Ask yourself, are my numbers telling me the truth fast enough to act on it? Or am I still flying blind and hoping the checks show up? If it's the second one, maybe it's time to talk to someone who only works with contractors. I really appreciate you watching it. If you made it this far, that's pretty incredible. Drop a comment if you ever had a tax surprise. That still hurts to think about. Misery loves company and you're not alone. Again, I'm Artem and I will see you at the next one.